Franklin India High Growth Companies Fund. Many investors are convinced about equities but are concerned regarding which category to choose. Equity funds are primarily chosen on the basis of market capitalization of the stocks in the portfolio, namely large cap, mid cap, small cap. Each has its own characteristics and advantages. They are, however, not aware of a fund category which offers a ready-made combination of all the above. Such a combination is offered by multi-cap funds. What are multi-cap funds? As an investor, are you wondering what type of equity funds to invest in? Why not consider multi-cap funds? These are the category of funds that invest in large, mid, and small cap companies in varying proportions depending upon the investment objective of the fund. What are the key advantages of multi-cap funds? There are several advantages of investing in multi-cap funds. They offer diversification across market capitalization. That is, they invest in companies of different sizes. Diversification across types of sectors. That is, they invest in companies across different types of businesses. Diversification across types of stocks. That is, they invest in different companies. This kind of multivariate diversification offers the opportunity of balancing out the performance. They help offer market resilience. They offer a relatively lower volatility vis-à-vis mid and small cap funds. What are high-growth companies? High-growth companies are those companies that have the potential to significantly benefit from the growth dynamics of a growing economy and have expanded their sales as well as earnings at a much higher rate than that of the general economy. Because these companies tend to grow earnings at a fast pace, they will typically have higher valuations. What factors impact high-growth companies? It is important to understand the growth dynamics in a growing economy like India. Economic growth dynamics in India centers around multiple factors like rising incomes, consumption patterns, infrastructure growth, and productivity. A look at the mega trends of the past decade reveals changing lifestyles, demographics, investments, and outsourcing as the key reasons for sustaining growth. For example, consumers have subscribed to modern retailing like online platforms for goods and services, especially for FMCG products and travel. Certain items like cars, which were a luxury a decade ago, are now almost a necessity. Changing demographics has seen a demand for more homes due to rising nuclear families, resulting in rising prices of real estate. Financial services have moved from brick and mortar to anytime, anywhere. To improve productivity, non-core activities are outsourced, especially in sectors like IT and IT-enabled services, auto components, engineering goods, pharmaceuticals, financial research and training and development. The decade has also seen the emergence of a strong urban middle class, fueling demand. Thus, large investments have flown into sectors like capital goods, power, infrastructure, construction, telecom and utilities, among others. What is Franklin India High Growth Companies Fund? This is an open-ended diversified equity fund that seeks capital appreciation through investments in Indian companies or sectors with high growth potential across the market cap spectrum. It invests in companies which tend to grow earnings at a fast pace and offer a trade-off between growth, risk and valuation. These companies generally have sustainable competitive advantages like proprietary intellectual property, strong management, distribution and/or cost advantages, or entry barriers specific to the respective sector. This fund focuses on taking advantage of India's longer-term growth potential while tiding over short-term volatility. Ideal investment horizon. Since the Franklin India High Growth Companies Fund is an equity fund, we recommend an investment horizon of 5 years or more. Equity funds tend to display volatility over shorter time periods. But when one invests for longer periods of time, that volatility factor tends to get negated. Financial goals. Every investment you make must ideally be linked to a financial goal, And this goal could be of varied durations, depending upon your investment needs. Since the Franklin India High Growth Companies Fund is an equity fund and is ideally suited for an investment horizon of greater than 5 years, the fund is well placed as an option to consider while planning for your long-term financial goals, such as higher education, planning for your child's marriage, building a retirement corpus, or even if you're seeking long-term wealth creation. Who should invest in this fund? The fund is well suited for investors with a moderately high risk profile and who wish to invest in companies with a high growth potential across market capitalization. Investing in this product could be a good alternative for someone looking to directly invest in a mix of large, mid, and small-sized companies. Tax benefits. Let's take a look at the tax benefits. Liquidity. You can redeem your investments in full or in part on any business day. The redemption amount is normally dispatched within 10 working days from the date of redemption. You could either receive this amount as a direct credit into your registered bank account or as a physical check, which you can deposit into your registered bank account. What more do you need to know? Let's get to know some fun facts of the Franklin India High Growth Companies Fund. For more information, please feel free to contact your mutual fund distributor or registered investment advisor. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.